All right, we're Group 4 with Zach Allred, Shane Cavani, Savannah Patterson, Michael Russell, and Elizabeth Smith. And we're going to be discussing investment banking and market developments from the week of in the week of February 7th through the 14th. So on Tuesday the 12th, it was announced that SeaWorld would conduct its IPO through the New York Stock Exchange. They filed their paperwork in late December, and Blackstone Group, a private equity firm, is the underwriter for the transaction. On Monday the 11th, KKR and Bain announced their intention to sell off $1.8 billion in the Hospital Holdings Incorporated at a share price of $36. And this offering could return as much as $1.8 billion to KKR and Bain, who would receive all the proceeds from the equity offering. This is the second offering in the last 3 months, and the HCA went public in March 2011, and it was the largest IPO from a private equity firm at the time. On Friday the 8th, Google chairman Eric Schmidt announced he would sell up to 42% of his stake in Google, or 3.2 million shares of Class A common stock. Schmidt will sell the shares over the coming year in a prearranged trading plan created for long-term strategy of individual asset diversification and liquidity. Akbank from Turkey issued 565 million in euro bonds to be sold in the international market. This is the first of its kind, and it illustrates a positive outlook for Turkey's economy. So far, it's been the third largest foreign debt issuer for emerging markets, only behind Russia and Brazil.
Developments in the merger markets. AMR and U.S. Airways have been meeting this week to work out the deal of their merger that was announced earlier this year. On Tuesday, the companies reported that their boards would be meeting to discuss the final details on Wednesday. Nearly all the significant points of the deal have been finalized. The parties are racing to finish the deal before Friday, when non-disclosure agreements that some AMR bondholders signed will expire. The merger is serving as a bankruptcy exit plan for AMR, who has filed for Chapter 11 bankruptcy. The merger would create the world's largest airline. The deal is expected to finalize within the week. Today, Warren Buffett announced that his company, Berkshire Hathaway, and investment firm 3G Capital are acquiring H.G. Heinz, most famously known for their ketchup. The deal will be a $28 billion deal, which is $72.50 per share, and is a 20% premium to yesterday's closing price. Cardinal Health has agreed to acquire AssuraMed, a Twinsburg, Ohio-based provider of medical supplies, for $2.07 billion. Economic conditions. The U.S. Treasury yield remained pretty constant throughout the week. The 2-year yield is at 0.26%, the 10-year yield is at 1.98%, and the 30-year Treasury yield is at 3.19%. U.S. municipal bonds. Muni bonds stayed quite consistent over the week. The municipal bond for 5 years is at 0.87%, and the 30-year yield is 2.94%. The federal funds rate is currently at 0.15%, and the U.S. LIBOR 1 month is at 0.20%. Since last Thursday, the S&P has gained just shy of 11 points and closed today at 1,519. The high for the week was seen yesterday at 1,624, and the low was seen Thursday at 1,512. The Dow Jones has also stayed pretty constant within the last week and has gained 38 points since last Thursday. The high for the week was on Tuesday at 14,038, and the low last Thursday at 13,852.
Current regulation news in the industry follows the Massachusetts securities regulator urging the SEC to ban a mandatory arbitration clause between investment advisors and their clients. Arbitration is when a middleman listens to both stories and decides what each party gets. Since the clause requires mandatory arbitration, clients cannot sue their investment advisors for losses or damages, which the regulator believes is not in the best interest of the investors. The second piece of regulation news involves the 12 regional Federal Reserve Bank leaders pushing to overhaul the $2.7 trillion money market industry. The major focus of the overhaul is preventing a run on money market funds, similar to what happened in the 2008 financial crisis when the government was forced to backstop the industry. On February 12th, Barclays announced its plan to cut 3,700 jobs and plans to reduce former expansion plans. Of the 3,700 jobs, 1,800 investment banking jobs are to be cut, as well as plans to shut down 30% of Barclays branches in Europe. Barclays' ultimate goal is to achieve a dividend payout ratio of 30%, where they are currently at 20%. Immediately following this announcement, Barclays saw an 8.7% increase in their stock price. Also on February 12th, senior UBS banker chief Carsten Kengeter is to resign. Kengeter's role at UBS was shedding assets to assist in restructuring. He is to be replaced by Samuel Malerno, who spearheaded the push to sell Bear Stearns in the financial crisis. Immediately following this announcement, UBS saw a 2.7% increase in their share price.
In news affecting the international markets today, gross domestic product growth in Brazil, Russia, India, and China seems to be slipping. This is attributed to the ongoing Eurozone debt crisis. China and Brazil both slashed interest rates in an effort to stimulate their economies. Both countries had fourth quarter downturns in the production sector. In related news, the G7 summit issued a statement condemning currency wars as the struggling euro continued its downturn. Many in the foreign exchange market have accused the Japanese of artificially devaluing the yen in an effort to stimulate its own economy. However, the statement failed to stabilize the euro or the yen. Also affecting the global outlook is the labor agreements taking place in the Eurozone, especially Spain. Spanish labor unions have reached an agreement to limit wage increases and other benefits for workers. This agreement has proved attractive to manufacturers like the automakers. Nissan, Ford, Renault, and Volkswagen have all made moves to increase production and take advantage of the cheap labor. Another impactful event this week globally is the deadline set by the European Union on the trade pact with the United States. If reached, the pact would essentially marry the U.S. and European markets, removing all tariffs and trade restrictions between the two. In the 5-day currency changes versus the U.S. dollar, the Canadian dollar ended at 1.0024, or up 0.46%. The British pound ended at 0.6331, or down 0.56%. The Japanese yen ended 92.685, down just over 1%. The European euro ended at 0.7483, up 0.25%. The Mexican peso ended at 12.725, or down 0.04%. The Chinese yuan ended at 6.2325, even. And the Australian dollar ended at 0.9691, or down 0.35%.
In the hedge fund and LBO markets, two hedge fund managers, German national Helmut Keiner and John C. Tausch from North Carolina, were indicted for defrauding investors. Keiner was indicted with fraud, bank fraud, and money laundering, and partner John C. Tausch was charged with bank fraud and money laundering as well. The two partners controlled many funds, including K1 Global Limited and offshore funds collectively titled the Oceanus Funds. From 2005 to 2008, Keiner moved Bear Stearns investment funds from K1 to Oceanus and back to K1 to give the false impression that funds were growing. Tausch administered a similar scheme against Barclays, and total losses from the schemes are in excess of $311 million. Keiner faces up to 200 years in prison, and Tausch faces up to 40 years in jail. Southeastern Asset Management, who owns 8.5% of Dell, is opposing the current Dell deal in hopes of creating a better deal for investors or changing the structure of the leveraged buyout. Under the current deal, which is the largest leveraged buyout since the financial crisis, Michael Dell and Silver Lake Partners are offering $13.65 a share to take the company private. Although the offer price represents a 25% premium to the stock's closing price the day before the deal was public, Southeastern believes that Dell is worth more than the offer. The shareholder vote will require a majority of shareholders to support the deal, excluding 16% of shares held by Michael Dell and other insiders.